Hey guys, welcome back to the update on the dividend capture strategy that I implemented in my portfolio recently, and kind of the results of how it all played out. So the funds that I used for the strategy were not all of them, but most of the Yieldmax funds that are of course really popular right now with their extremely high distribution rates. We have Cony, C-O-N-Y, with a distribution rate of 90.4%, and NVDY with a 108% distribution rate, so paying extremely high distributions each month, which of course is going to make them very attractive to some investors. And as some of you might know, the distribution announcement, the ex-dividend date, and the record date all happened this past week for the Yieldmax funds. So we're going to go over how much I made in total this week based on the amount of shares that I owned, and also find out if this strategy is profitable month over month, or if it's even worth it at all, because I will say that it can be a little stressful. So starting at the beginning of the week, around Monday and Tuesday, I was buying a good amount of shares of each of these Yieldmax funds, with the exception of one Defiance fund called QQQY. I only bought about 10 shares of that one. The total amount invested into all these funds was just over $27,000, and as I talked about in my last video, all this capital here was borrowed on margin, which of course makes the strategy a little bit more risky, but it's the risk I was willing to take on. Now this month was a little bit different. The ex-dividend date was on the 6th of June, as well as the record date. So both the ex-date and the record date fell on the same day, when typically the record date is one day after the ex-date. And it looks like for the rest of this year, this will continue to be the case. So if you buy or own the shares one business day before the ex-date, you'll get paid on the distribution payday 2 days later. So in this case, the final day was the 5th to own the shares, and I got paid on the 7th. You also have the option to sell on the ex-date, as long as you own the shares the day before, which is exactly what I did. So as you can see, I no longer hold any margin because I sold out of all those funds. So now I have just over $1,700 in cash, and that's including the cash dividends I received on the 7th. So back to the total income that I made this week, with around $27,000 invested, I earned a total of $1,448.43 in distributions or dividends. And what I really like about getting paid in dividends is that I now have the freedom to do really whatever I want with it. I can either reinvest all this money back into the same funds that paid me, or I can invest it into the other holdings in my portfolio, or if I really wanted to, I could cash it out and buy a really nice fridge. We're moving into a new house in a couple weeks, and a new fridge has been on my mind. So including both dividend payments and capital gains for my entire portfolio, I made a total of $2,000 this week, or a percentage gain of 2.08%. So I'd say the strategy this week was fairly successful on an income standpoint, but these dividends are definitely not free money because there is a lot of risk involved. Because each of these funds are paying out so much cash each month, their NAV, or net asset value, tends to drop pretty significantly on the ex-dividend date. As we can see here, NVDY, for example, rallied a couple percentage points leading up to the ex-dividend date. Then on the ex-date, it fell about 10%. And this is something that's very typical each month for all of these funds. So depending on what your average cost is, you could still have a negative return even after those large dividend payments. You can see with my own portfolio how much volatility there was throughout the entire week. There's a lot of dramatic ups and downs. Now keep in mind that I only bought and sold these funds within the matter of about 5 business days, so you could argue that these funds are better for long-term investing rather than having to buy and sell within a matter of a week. But in my opinion, I think these funds are best utilized in the short term and are a little too risky to hold long-term, but I still think they're great tools to help fund your other long-term investments. Again, that's just completely my opinion, but let me know what you guys think of these Yieldmax funds, or really any ultra high yielding ETF, and I'll see you guys next time.